Is your 1031 exchange in jeopardy because you just cannot find an acceptable replacement property? What if there was a way to exercise the tax deferral benefits like a 1031 exchange, but receive cash instead of having to buy a replacement property? Well, there actually is such a strategy, and we've got the answer. I'm Pete Mitchell, broker and principal of MPI Commercial Real Estate. We're a solution-focused licensed California real estate firm with specialization in real estate investing, disposition of real estate capital assets, mortgage debt restructure, and introducing capital gains tax strategies to investors nationwide. Today, I'm excited to talk about a very unique and powerful strategy to managing capital gains taxes when selling an appreciated asset. This approach can be used when selling a business, a primary residence, investment properties, or any other type of asset, excluding securities, where $1 million or more will be exposed to capital gains taxes. Now, everyone's heard of the more common approaches, of course, a 1031 exchange, deferred sales trust, and a Delaware statutory trust. All of these have benefits, but there really is only one that we've found over the years that is the most advantageous to investors, putting deferred tax dollars in the hand of the investor today, giving them the control and flexibility to reinvest as they please with very few limitations. The strategy I'm referring to is the Monetized Installment Sale. Truly a game changer. Now, some are familiar with this approach, but many are not, including a good number of CPAs and tax attorneys, and that's okay. It's not uncommon and should not be alarming if your advisor is not aware of the Monetized Installment Sale. Keep in mind, the IRS tax codes are vast and cumbersome to say the least. Our tax legal team will gladly come alongside your advisors and work with them throughout the process. So how does this work, and will it work for you? The Monetized Installment Sale process can be a little complex and confusing, but in the next few minutes, I'll give you a quick, simple overview of the process. From there, we can discuss your particular scenario and see if this is a worthwhile option for you. So let's proceed. I believe the easiest way to explain the Monetized Installment Sale is to look at it as if you were doing a 1031 exchange. But before we go there, let's back up to a traditional sale. The seller identifies a buyer. The seller sells the property to the buyer gets title, the seller gets cash and pays the appropriate capital gains taxes. Now, if you're in California, that's just shy of 40% in capital gains taxes. In a 1031 exchange, a qualified intermediary is used between the investor and the buyer that the investor identified to purchase the property. Once the relinquished property changes title to the new owner, the sales proceeds are held in a qualified escrow or trust account. This is where the pressure and the clock starts ticking for the investor. They are required to identify a like-type replacement property in 45 days, and they must complete the purchase of that newly identified property within 180 days. Should the investor miss either of these deadlines, it puts the entire 1031 in jeopardy, and they will be required to pay capital gains taxes, with very few exceptions, if any. In a monetized installment sale transaction, a qualified dealer and an active 30-year escrow account are used when the relinquished property is sold. But here, the seller is not required to purchase a replacement property. Instead, the seller receives cash equal to approximately 95% of the sales proceeds in the form of an interest-only, non-secure, non-recourse loan through an arranged private lender. By the terms of the escrow, the dealer is not allowed to touch the sales proceeds until the seller receives the loan, usually within about 72 hours. The seller, who is now identified as a borrower that received the 95% loan, does not make the monthly payments on the interest-only loan. The 30-year escrow account, which is holding the original proceeds that are generating interest from investments, makes the payments on the borrower's behalf automatically from the escrow account. The interest charged on the loan is negated by the interest earned on the funds in the escrow account. It's all automatic and headache-free. By structuring the sale in this manner and following the guidelines of IRS Code Section 453, the taxes are deferred for 30 years and the investor comes away with tax-deferred cash. The Monetized Installment Sale is supported by a 2012 memorandum issued by the Office of the Chief Counsel of the Internal Revenue Service. This strategy has been successfully used in the disposition of capital assets by several small investors up to publicly traded companies like Kimberly-Clark, International Paper, and OfficeMax, to name a few, ranging in deferred taxes from $800,000 to a full $4.8 billion in size. The monetized installment sales is proven to be a superior alternative to other forms of tax-deferred strategies, especially a 1031 exchange. It puts the investor back in control with cash in hand. Investors are free to invest on their own terms with few limitations and with deferred tax dollars, versus trying to deal with the seller of a replacement property who knows you must buy or pay taxes, all but eliminating your negotiating power. By now, I'm sure I've piqued your curiosity and you've got questions, and I'd welcome a conversation to discuss your particular scenario. The bottom line, if you would like to keep most of the cash at closing versus paying capital gains taxes, and if you're tired of running around trying to find a replacement property, dealing with the headaches and frustrations of a 1031 exchange, and possibly settling for a property you really don't want, but you're thinking of buying just to avoid paying taxes, we've got the missing piece of the puzzle and the solution for you. The Monetized Installment Sale. It's a real game changer. If you'd like to discuss, feel free to contact me and let's take a look at your situation. From there, we can arrange a complimentary consultation call with you and your tax advisors and our tax team to see how this approach may be a benefit to you. Thanks for watching, and please feel free to share this video with whomever you feel it may benefit.